Berkshire Hathaway reported record fourth quarter and fiscal 27 earnings over the weekend. Let's go to Ramy and Inocencio at the wall with the Bloomberg charts we need to know. And Ramy, it wasn't just the numbers, right? Warren Buffett also had his annual, much anticipated shareholder letter, which was a little bit shorter than usual this time.
That's right. And it usually seems that the shareholder letter often overshadows the numbers here. Investors really looking to get into the mind of Warren Buffett. And you said it there, 16 pages. It is the shortest letter in the past 20 years. Of course, Warren Buffett has been writing these over the past 50 years or so. And in it, he talked about those record profits that you mentioned. He also talked about the first underwriting loss that's happened in the past 14 years. And he also talked a lot about his frustrations in M&A. More on that a little bit later. But first to those record numbers for profit. #BTV 9681. We're here in the fourth quarter right now. $32.5 billion is what they got. Look at just how gangbusters this went relative to the whole entire history of what's been happening with Berkshire Hathaways. But as I've written here, profit is just half of the story, because the other half of the story, on the order of $29 billion, came from U.S. tax reform. In total, that's coming in at about $65 billion or so. So hold on to this. You're going to remember this spike right here as I send it to my next Bloomberg terminal chart. Bam, #BTV 9680. This green bar here is showing EPS growth on the order of 400% year on year, 417 to be exact. We had been seeing contractions over the past 3 quarters before that, but with all the good things that are coming out from Berkshire Hathaway right now, this is something that investors are going to be very, very happy about. With that said, there is one black eye, so to speak, not a big one, but a medium-sized one, I suppose. When you take a look at operating margins, #BTV 9679, 10.86% is the operating margin for this last year, 2017. But look at this. The last time it was that low was in 2008. Of course, that's a financial crisis here. We're looking at some of the weight from that underwriting losses, $2.2 billion from hurricanes, 3 hurricanes that hit the Gulf Coast as well as the U.S. East, a Mexican earthquake, as well as those California wildfires last year that, of course, we were talking about. So enough of the numbers here. Welcome me to this side of the charts, and I want to show you some of the bigger takeaways here from everything that we've been digesting over the past few days. So the 2017 net worth gain for Berkshire Hathaway was $65.3 billion. I just talked about that $35 billion plus a $29 billion or so, coming in roughly at $65 billion here. The per share book value gain, this is something that Warren Buffett really likes to talk about every single year, up 23%. Now, over the past 50 years or so, the gain has been about 19%, so definitely outstripping it in this past year. And then there is a couple negatives, one warning and one frustration, as I've coined them here. The warning that Warren Buffett says is that there's going to be a new GAAP rule that's coming out that's going to be distorting net income moving ahead. So investors are going to have to take everything with a grain of salt there. And the frustration is that there's, quote, a sensible purchase price that he's looking for, not that there is one right now in terms of M&A. Let's go and switch up the board one more time. I love this quote here, because while other CEOs are looking to do M&A, and they have done M&A, he's saying that the less the prudence with which others conduct their affairs, basically he's saying a lot of people are, right, the greater the prudence with which we must conduct our own. And of course, we know that Warren Buffett definitely attaches his importance to passive funds, indexes, and he's saying that that has been the foundation for all the positivity, and he's going to go ahead with that in the future. With that said, he's also going to be looking for M&As. He just hasn't targeted one just yet.